Morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, January 31st, and we are about 24 hours away, about 25 hours away exactly from the FOMC meeting tomorrow, the first of the year. I believe there is 8 or 9 of them this year. So good to know that we are knocking one down as we get the year started early. This is a pretty big deal. We had Europe report some GDP numbers. We had GDP numbers last week. We had PCE. We also have lots of big tech earnings. If you read the Trade the Chain newsletter, we mentioned all the major tech earnings this week, along with FOMC. Most of them are following FOMC, which is also quite interesting. The fact that we're going to get potentially more volatility after the big volatile moment. So it's good to understand that tomorrow FOMC is at 2 p.m. We're going to get the rate hike announcement at 2 p.m. The rate hike announcement is expected to be 25 basis points. That is 99% priced in as per CME futures. And what the market is likely really going to be looking for? Well, first off, the market will be looking for a 25 basis point hike. That's what's expected. If you get that, you're probably going to have your Darth Maul candle, and then we're more or less flat into 230, which 2:30 Eastern, I should say, which is when Jerome Powell's speech starts. And now Jerome Powell's speech is probably the most important part about the entire FOMC segment, because he's giving you guidance for the Fed actions moving into the rest of the year. So are they pleased with the current data? Are they looking at indefinite rate hikes? They're looking at more rate hikes. They're looking at exactly their verbiage around their outlook towards inflation. That includes both services inflation, goods inflation, and employment or wage inflation. And then it also pertains to their outlook on future rate hikes. Will there be further rate hikes? Will there be future rate hikes? Will there be indefinite rate hikes? Each of those kind of implies a different length of time, and you obviously want to look for the shortest length of time, and as it pertains to future rate hikes. So the market's going to be looking out for that language, and that language will be very important for how we perceive momentum going forward. If there's indefinite rate hikes, which means potentially longer than the market has priced in, the market goes lower. If there's future rate hikes, then that potentially means that the market is correct, which could mean higher. And then he could completely ride the fence between hawk and dove, and then we go flat and don't really end up moving materially in any direction. And then of course we'll have earnings on the heels of that. We have Apple, we have Amazon, we have Meta, big tech companies making up NASDAQ and S&P 500. So those indexes could suffer if earnings are bad, which could then potentially mute some of the momentum from FOMC. So you're seeing how all of these things are going to interact with each other. And that's why it's smart to, play it a little bit more risk averse and be aware of, obviously, the macroeconomic situation, because you may, punt a trade on, good FOMC report from Jerome Powell, between 2:30 and 3. And then, Amazon and Apple come around and have, lackluster earnings and smack risk assets back down. So, not saying that's what's going to happen. I'm just saying, that's what could happen, along with many other variables in relation to how many different pivot points for trades we have. So looking at looking at DXY, we can see yesterday when we were talking, we did rise and break above that level that we were talking about, that 102 level. We rose higher and then immediately had a swing failure pattern back down lower. And that's why you're seeing risk have a bit of an improvement today. DXY pretty much slapped back right where it was yesterday pre-dump, or pre-risk asset dump, I should say. And so, obviously the market is on edge with FOMC tomorrow, and DXY, poking higher, but, does look very similar to what we saw on the 17th. And of course, the Goldilocks situation for FOMC is this spikes up and then completely crashes back down into the next support area, which would allow risk to flourish. Remember, I'll go on the daily to get a bit better review for you guys. Remember, for my outlook, while we are sitting on a support level, I think the support level is around 99,100. So something to keep in mind for risk assets moving forward. I'm not ready to to say that DXY is going to definitely head down there, but I think it's more likely than not. And a pretty ugly daily close on DXY would certainly help risk moving into FOMC. So looking at equities, we told the trade the chain community this morning as prices were poking up into the 40-40 area. If you can flip 40-40, you're obviously headed back to recent highs. If you get stuffed at 40-40, you have the previous daily close. And if you get stuffed at the previous daily close, you have recent lows. Right now, we do look to be trying to break above 40-40. It is still within my little VWAP cloud, which is more or less, resistance and has been, especially yesterday. So if you can, confirm 40-40, which it does seem to be trying to confirm, you had a close at 40-40, and then you had a break, and then you had a push lower and a push higher. So this does look positive. I still would maybe want to see another retap around the 40-40, 40-43 level, but equities do look a little bit more promising than not. But we do have to watch out for what happened here when we broke out of the cloud and then got stuffed back down to right around where the previous daily close was. So cautiously optimistic, with DXY moving lower, I would say equities are definitely poised to move higher. And if equities are poised to move higher, likely is crypto. So cautiously optimistic on this, back above the 40-40 level. We need to hold that. As you can see previously, we did struggle. So although we did close above it and kind of bounce off, we still had this, action down lower. I'd be curious to see if we retap that VWAP before moving higher. So not longing equity, not longing risk here, but cautiously optimistic if we can hold that 40-40 level and stay above the VWAP. So looking at Bitcoin, very similar outlook. I did mention the trade the chain community yesterday, and feel free to call me out if you don't believe me on these trades. Called out this swing failure pattern right here. Said if we had a drive higher and broke above the 100 estimated moving average, that prices would move higher. Had a drive higher, stuffed under the 100 moving average for a little bit, broke higher, confirmed it, and then moved up. So if you would have long that swing failure pattern, you would have been in profit the entire time, even with the retap to the close of the VWAP. So very good trade there, and of course, reflected across the rest of risk assets. I called this out during the evening yesterday, as clearly price was forming that swing failure pattern around 2-3 p.m. My time, and then obviously we had a pretty good boost going into this morning. So cautiously optimistic again for Bitcoin, although I consider 23.3 to be the staunch resistance, which we tapped a few times this morning. Getting above the VWAP, very good sign. As you know, I do like to track the 100 moving average of the VWAP as resistance points through a range, and we are above the VWAP currently. So if you can get above 23.3 and flip that into support, you can obviously reattack range highs, or at least start to build a little momentum back up at the high end of the range for higher. So again, cautiously optimistic. We are above the VWAP on Bitcoin. We are above the VWAP on equities, but I would like to see it confirm. So I would like to see it close above the VWAP and then drive higher. That would be a good sign. If we close above the VWAP and don't drive, the trend is definitely getting weak. And then you're probably back to at least the 100-day moving average or the previous daily close, if not to the demand zone. Which, I mean, if you think about it, would make sense. FOMC is tomorrow. I do understand the market is expecting that 25 basis point hike, but be wary of whatever momentum drives into FOMC. I am still cautiously optimistic. I think there's a lot of reasons to be optimistic, at least in the markets rather than the economy, at least in the short term. But I've slowly started to sell some spot holdings that I had up here, and I'm not really taking a whole lot of risk right now in my trades due to FOMC being tomorrow, as I think many are probably feeling the same. So close above the VWAP, probably drive higher. Close below the VWAP, probably at least back to the previous daily close. So looking at Ethereum, same thing. You had a wick up above 1600, failed back lower. We are above the 1 hour 200 moving average as well as the VWAP. So, two good signs to be above for Ethereum, but again, need to close and drive. We did above it, but no drive, hovering still around this confluence of supports. Doesn't look extremely strong, but if you can close above it and have a bit of a drive upwards, then 1600 may get cracked, and then you're headed back to recent highs. Very similar to the outlook with Bitcoin's VWAP and equities, both VWAP and being above support, and the fact that, of course, DXY certainly does not look bullish in its current form. Could it start to reverse a little bit, maybe around 102 flat, 101.9? Certainly. And that's why, after a recent pump, it's better to be risk averse and wait for these confirmations, because these confirmations are also kind of reflecting what's DXY going to do. It's kind of, it's obviously moving down. Is it going to catch? Equities and risk are kind of at resistance. So, better to wait for the confirmations and wait for something that's going to give you indication of a good trade rather than just jumping into one willy-nilly. Now, for FOMC tomorrow, a few ways to play the trade. Again, I think that, as long as the rate hike announcement is expected, which is 25 basis points, you're just going to get a Darth Maul wick around 2 p.m. for pretty much every asset. It may sell off quickly and then rise, or it may rise and then sell off quickly. So, be careful trading that. We typically do see that type of volatility. But the 230 route is, once that initial volatility subsides and Jerome Powell starts giving you, some indication of what the Fed is thinking, you can enter basically an equal trade. Let's say you long Ethereum, you're short Bitcoin, an equal value in terms of future value. So if you lose 1% on Bitcoin, it's equal to gaining 1% on ETH. That way, no matter where the trade moves, you are even minus your fees. Now, depending on where the momentum moves post Jerome Powell's speech or during his speech, depending on the verbiage he uses, you can then cut one end of that trade in a slight loss and allow the other momentum to continue. Now, it is important to note that, just looking at where we're at in the grander scheme of things, it is important to consider that, considering we are at resistance, we could just pipe higher, tag, 4160 or something like that, and then move immediately lower, forming some sort of, higher time frame double top, and then toppling back down to the low end of the range as well. So, I have this prediction for this FOMC is the most difficult it's been because of this rise and, some of the positive economic indicators we've been getting. But if Jerome Powell says he's not pleased or the data is not exactly where it needs to be, that's obviously going to be bearish. So I'm optimistic going in, but I do recognize that we could move very swiftly in both directions. And I want everyone to be aware of that, because you've basically got what's going on is, market entrants have been moving into the market, certainly to make use of this volatility. The market now is, is this just volatility? Is this a bear market rally? Or are we, kind of on to the next epoch in the market where we're starting to see the forest through the trees, see the light at the end of the tunnel, and understand that the economy should be improving and a soft landing is more likely than not. Now, that is true, but if the Fed is still raising rates higher for longer, that economic impact is obviously going to be extended. And then, what other actions will the Fed take in the future that could further impact liquidity on the market, and of course, the outlook on risk. So that's why when I see this does look good, and I do think, we can still run a target to at least 4,100 or potentially 4,160. But do we quickly sell off those highs after the market reprices in everything that we've got, and starts to look towards another 25 basis point hike potentially? So I'm definitely at a loss, but I will probably wait till the 230 segment and then probably enact that trade thesis and then try and time whatever momentum I think. I mean, it does seem, the market does seem to be positioning for Jerome Powell kind of bringing the hammer, because, ripping markets while the inflation is still above 4%, still not really good. But, if the market is truly expecting inflation to come down and a lot of those, previous issues to begin to abate in the future, then prices will continue to rip as we readjust to the economy looking like, pre-COVID era, et cetera. So very difficult trading. I would recommend, probably pausing around the 2 p.m. point for any trades and waiting for the 2:30 points. You can obviously set those equal trades in both directions, or you can go full cowboy and wait for 2:30 and pick your bias and run with it. So we'll, of course, be updating the Trade the Chain community. We'll have our daily crypto update tomorrow to discuss, a few things just before FOMC, because it is at 2 p.m. and we typically hold these before 2 p.m. So we'll have one more tomorrow to discuss exactly what's happening in the market beforehand. But for now, we had a pump into resistance last night. We have a FOMC tomorrow. Probably a little bit better to be risk off, not take too many chances, and hope for news that benefits your edge, your trading style tomorrow. So good luck, happy trading, and speak to everybody the next day.